Derk, thanks very much for joining us here at the EPRA Sustainability Summit. What were some of the key takeaways for you from the panel that you were speaking on?
The panel was all about carbon reduction strategies and also looking backward and forward. Backward in terms of what have we already achieved over the past decade, more or less. Well, I've stated that over the past 16 years that I've been in sustainability and real estate, that I'm still not satisfied with the data coverage we have achieved so far. We use the GRESB data to measure our energy and carbon data coverage, where we arrive at roughly, let's say, 80%. There are still excuses not to collect data, or there are some hindrances, of course, to collect the data, but just relying on proxies is not sufficient anymore, especially not with the SFDR around. And we've talked about the GRESB rating, but also that step-by-step regulations is catching up. What we see now with the introduction of the SFDR, and especially also with the definitions around sustainable investments, you see that the landscape is step-by-step also changing. The number of data providers has increased, so the data landscape has become more fragmented. It has become quite a challenging job to get, let's say, to get the data we want to make informed investment decisions. It's good to achieve at least at standardization. One of the panelists touched upon that because effectively there were two standards on stage. One was the net zero building standard from the UK and the other one was on CRREM, where the other panelists stated that why do we have two standards? And I think for global investors like us, it's always good to have one global standard. The CRREM pathways, which we have been in favor of as of its inception more or less, and we have promoted globally as well, is for us really the standard when it comes to net zero. So for us the net zero definition is being CRREM aligned, and the CRREM pathways are not perfect, of course, but that's always with maybe also one of the takeaways. What have we done over the past decades is also developing standards and new standards and competing standards, and that's often also a hindrance. So I've also called for, let's say, more standard data disclosure, and I expect that also EPRA could play a role there with the peers globally, ultimately arrive at kind of a global data hub where the investors could retrieve all the information they need for, let's say, the regulatory reporting. And as I said, the regulations so far, they are catching up. The new definition for us on sustainable investments will be challenging. It means that there's kind of a new norm, and we will publish the new sustainable investment definitions as part of our SFDR requirements. So there's a new challenge ahead of us, which is good. So we have grown over the past decades, but going forward there's still a lot to do. There's not much time left to reduce the carbon emissions. And in this regard, we have also discussed the role of embodied carbon, where I've challenged a little bit the audience and the other panelists whether the current strategy is sufficient. I think more attention should be paid to the cement and steel sector, and hopefully they can do the task they have to do and to reduce the carbon emissions, because ultimately 50% of the embodied carbon links to the cement and steel industry. And if they do their job, then that will automatically also feed into the real estate and construction industry. So not underestimating the importance of embodied carbon, but calling for action for each part of the supply chain effectively. Like we expect from real estate investors to ensure that the buildings ultimately become compliant with the CRREM pathways.
Yeah, I think it's going to be really interesting to see how that develops, and especially that focus as well on the concrete and steel elements versus timber construction is really fascinating. Thanks very much, Derk.